Good afternoon, everyone, and welcome to this market update. It's been a couple of months since I've done one of these, but things are getting interesting, to say the least. We'll start here today on the DXY, which is the dollar index, weighted about 60% euros, then also made up, paired against the yen, the Aussie, the Kiwi, etc., the pound a little bit as well. So as you can see here, we are currently, sorry about that, monthly chart. You can see we had this breakdown and now we're getting a bit of a bounce. You can see this on the daily chart. We had a double bottom, meaning price rejected off this same support level as it did a few days previous, bounced up again, broke through, potential false breakout, who knows, still developing. So it's looking like dollar has found a bit of support. It's slowing down now, indicating that we could be seeing a pullback. How far will the pullback be? Well, potentially daily and monthly 50s. I'll look to target around that first. But if it's really aggressive, if this is the end of this Elliott 5-wave count, could this be a potential wave 1 breakout, wave 2 pullback to that daily 50 EMA? Time will tell. So before we go on to any other charts, I will go here to the market sentiment, and you can see it's currently on 70 in greed. Back in March, this was at extreme fear of 3, was the lowest I saw it. And now, since we've had this equity bit of a, bounce, well, bit of a 40% gain since March, you would expect this to move higher into the greed. So market sentiment's also very important. And these are some other figures, but we won't talk about that for today. Next, we'll go to the 10-year yields, which you can see this chart. So how it corresponds is lower yield on here indicates bonds being bought and a higher demand for bonds, because see what happens is, to attract people to bid in the auctions of bonds, they offer higher yields. But when the demand is high, like currently, they have no choice but to offer a little bit less of a return because the demand is so high. So therefore, the yields aren't as incentivized. Well, they still are compared to most other things. And when you have large sums of money, you can get a small percentage on your billions of dollars. That is a very, very good return. So these investors, they don't want big risk and they choose bonds to be safe. Yes, little return, but you don't have a 35% downside like we did in March. So we can see here we found a bit of support, had a bounce, now it's coming back, breaking this daily 50. So still hasn't made a higher high. So it's still trending bearish, and I'd expect this to get potentially back to previous lows, if not break through it in the months to come. 30-year bond yield, same thing, trading at 1.3, and the 10-year was at 0.627. So moving on now, we'll go to a couple of pairs. Let's go to gold. See gold safe haven asset had this much sell-off, and we've had a nice rally of 42%. So decent gains there in 6 months. I actually was in this. I bought it in 2018, December, and I just sold it last week here because we've made a new high. We're starting to show bearish price action here. You can see on the weekly chart, bearish engulfing, high test or shooting star for some of you. And you can see this is confirmed here because look, daily high, lower high, didn't make a higher high. So easily and obvious signs and evidence to say that this here currently is being confirmed on a daily time frame. There is 7 days left in the month, so let's wait and see. Will this body close lower down there, get a nice, really nice high test, or will it come up and close back higher than it opened? Silver, similar sort of thing. See a lower high on the daily chart being formed. Similar here, we had a top formed on the weekly. You can see that confirmed with this red bar after all these black bars, which are bullish. And then we had this rejection, and now looking to continue that for a pullback. I'd be looking to first target around this daily 50, which also lines up with the weekly 0.382 Fibonacci. Dow Jones, you can see we haven't got back to the same level as what we did back in February before the sell-off. Are we slowing down? Well, yes, we are, because you can see this moved up pretty straight, or on a more of an angle, obviously, than this. Consolidated, and again had a sell-off. Consolidated, had a bit of a bounce here, and now we're starting to slow down, and you can see that in these candles, much smaller candles, not much difference between open and close prices. Therefore, are we starting to lose this bullish momentum? Time will tell. Moving on now to the S&P 500. You can see last week we got a new high, slightly. So we have reached the same levels and slightly higher than that before the drop. And, you know, they were saying it's a V-shaped recovery. Well, not for the economy. For the stock market, yes, it is. Funnily enough, that's where most of this money ends up going into anyway. And if we look here to, well, when I say that, this is the economic tracker thing by Harvard and Bill and Melinda Gates Foundation. You can see here, this is consumer spending, national in the US. We have not reached a V-shaped recovery yet. High of February, March, we have not got back to there yet. We are still lower. So, yes, the stock market has recovered. It's all its losses, but the economy is still not functioning the same as what it was before. So that's the facts, that's what it says there, and that's nothing political. Let's look at the facts, guys. So let's now go on to the other markets. The Nasdaq, this is absolutely soared to record highs, new highs most days the last couple of weeks. see, measure this, 70% gain since March. And this is the big dogs that make up the Nasdaq. Microsoft, similar price action, massively broke out past its highs, 63%. This is Amazon. These companies absolutely do very, very well during these current changes that we've all had to go through. 106% Amazon, unreal returns. Apple, this is still just continues breaking higher. %130%. Google, %57%. I'll go do a few more. Tesla. Oh, this is Facebook rather. 103%. And Tesla. Unbelievable. 500% return. Unreal. Since March. So those are some of the companies that make up the Nasdaq. So you can see massive returns in 6 months. Massive. So of course you're going to see that in the Nasdaq 100 chart as well. However, remember, when we have these sustained bull markets making higher highs, higher lows continuously without any correction back to value, which all markets happen, they have runs and they have pullbacks. Look at this. This has been on a massive run ever since 2009. Massive. So, you know, there's no way I'm looking to short this at this time, but I'll be waiting for further development, looking for little quick plays down to the downside, but more so long-term hedges. But remember, the harder they go up, the harder that they can go down. Just have a look at the Bitcoin chart and see what happened. Big run up, correction. 86%. 37,000% gain. Unreal. 82% drop again. Then we haven't had as much of a gain yet. It'll be interesting to see what happens with crypto. But back in March, we had a sell-off like in equities as well. A couple of other markets now, and this is Nikkei. You can see hasn't quite got back to the highs yet. China surpassed highs, stalling there now, slowing down. The Nifty 50 Indian market hasn't reached its high yet. UK, very weak. This is actually one of the worst performing ones, as you can see here in the chart. Didn't even break through its monthly 50 like all the others. Europe, looks like it's rejecting this 0.618 50 EMA region. German DAX didn't make a higher high. Australia index stalling at 0.618 Fibonacci. and the Toronto, Canada index still hasn't made a higher high. So interesting. Only the S&P 500 and the Nasdaq across the world have made new highs. Nasdaq, very obvious. Gold, silver's done well, and other sectors such as healthcare. But the S&P, yes, made a slight higher high last week. But other sectors like consumer discretionary, you'd expect people rely on goods, higher highs. Consumer staples, Amazon and all that make up these as well. Yeah, it's made a higher high just last week here on the 18th. Healthcare, very strong. And you'd expect that because, well, there's a virus, so there's a demand for healthcare. New highs for that as well. However, when we go to financial sector, there's the banks. Look at this, not as good. Stalling, rejecting the monthly 50.618 fib. Hasn't made higher highs yet. Energy, very, very weak. One of the worst performing sectors. Massive high test rejecting that 2 months back in June, and yeah, look, barely could even make it back up here. Well, it did. So industrials still hasn't fully recovered. Small cap, this is a Russell 2000, still hasn't reached the highs yet. Materials, yeah, it's recovered. Look look what makes up the materials. The GDX, which is gold miners. High demand for gold mining. Gold mining companies, good returns as well. 181%. Best performing sector. Gold miners, very good. Real estate. Hasn't recovered yet. It's looking like it's rejecting. You can see from most of these candles being clustered, all in this similar sort of, between this similar sort of range. But this is without US in it. Global real estate, look how weak that is. Technology, we looked at that. That's great performing sector. Telecom, yeah, it's recovered. Utilities hasn't recovered. Have a look at the other one. I have two of the largest here, so Spider and Vanguard. It's pretty much the same for all of them. Now, quick look at bonds. It's a 20-year Treasury. This massive buying since 2018. And they were saying last year in the news, in the media, that yeah, everything's all right. Well, why are the demand for bonds increasing then? Because the big boys, the banks, the institutions, the hedge funds, with all the capital, they're the ones that the smart money, as you like, are the ones that are buying here. Volatility. Had a big spike up in March, and now we still haven't calmed down yet. Still quite high, but volatility has definitely, as you can see, starting to slow down. So when you get high volatility, that correlates inversely to the stock market. High volatility, and then usually you'll see a sell-off inversely to that. So this goes up, stock market. When the stock market goes down, this is volatility for gold. February, big sell-off, and then it's calmed down a bit of volatility again, but we're still at a lower high. Nasdaq volatility, same thing, sell-off, calm down, but starting to calm down, but still not back the same. So there's more volatility, basically. That's what that means. Couple more. This is home builders. Lumber has been a great performer also. Cannabis sector, pretty weak. Very weak, that one. Very weak. Obviously not a high demand. The company's there. Defence still hasn't recovered. Transportation still hasn't recovered. Biotech, great performing sector also. New highs, closed out with this high test. Looks like it's rejecting here. Lower highs, failed to make a higher high. Airlines, very weak, as you'd expect. Massive, look at that. Anyway, guys, that's about it. That's all the sectors. We covered the indices, gold, DXY. We'll look at this actually. So this is hedgeopia.com, and it gives us a look at the big boys and what they're doing with and how they're positioning themselves in different things. This is the 10-year treasury, and you can see currently the green represents bullish and the green to the downside represents selling, so bearish. So see, we've had a bit of a buy here and this has dipped off, but here we had a bit of a sell. That went up. Actually, that's incorrect. So yeah, buying, selling. So this is 22nd of August. And you can see buyers are starting to buy 10 years again. Currently net long 87,000. Up 81.5 thousand since the last report. These are done weekly, I'm pretty sure. This is a 30-year bond futures. So they're betting that the bond yield will drop. I'm pretty sure. Is that correct? Currently net short 144,000. Oil, net long. Funnily enough, if we look at oil, this is US oil. There's also Brent crude, which is, I think, British. I'm not sure. You can see oil has not recovered either, and it's been stalling around this weekly. Hasn't nowhere near recovered. So when you combine technicals with fundamentals, you get a very, very good outlook and picture of everything that's going on. You can see though, the big money is still overall betting that oil will continue to rise. However, that doesn't mean that they're correct all the time. S&P 500 net short. This is euro dollar. So they're currently very long the euro against the US dollar, being that the euro will continue to gain strength against the US dollar. And if we look here at the euro to US dollar chart, we can see that it is just above this trend line. Potential false breakout. Wait and see. We've got 7 days left. That's why I said things are getting interesting. We're at some key levels and key turning points where things have to be decided in the market moving ahead. And you can see price now is at 0.618, the golden ratio. Looks like it's rejecting. Beautiful high test rejecting. Key resistance last week. So will we see the turnaround, the euro sell off, the dollar gain strength, and in turn, these bets be wrong and hedged, betting too heavily on this continued bullish euro. Gold, very net long. Nasdaq, yeah, net long. Russell 2000, net long, but slowing down. Net shorts US dollar, yes they are. They're short the US dollar. And last but not least, they're not long volatility, they're short. So you can actually buy short volatility. So betting that volatility is going to go down. I'll have a quick look at it. SVXY. So this goes up when the volatility index goes down. So you can see this March to now, it's gone down obviously, and this has gone up 53%. Interesting how this nowhere doesn't look anything like the movement in the VIX at all. UVXY is long to instrument if you want to go long volatility. So that's the same as pretty much that. So interesting, guys. So yeah, that's about it. Turning points currently. Let's keep an eye on the US dollar. The US dollar continues to sell off. I'd expect the S&P, stock market, most sectors to continue their sort of upwards drift. I just don't think it's because it's obvious in the charts that momentum's slowing down. Will we see a bounce, continuation, and potentially a trend reversal in the US dollar? Have we finished the 5-wave count and looking to turn around and become bullish? Or is it just a pullback? Time will tell. If the US dollar rises, expect to see a market sell-off, bond yields to continue lower as investors look to buy in for safety, and also currencies like the Swiss franc and the Japanese yen also to gain strength as they are also seen as safe haven currencies like the US dollar. Gold, silver, crypto, I would also expect to sell off with the stock market, real estate, everything. And then I'd be looking to see the same as what we're looking at now, market starting to lose that bearish momentum this time and looking to start positioning in long term, buying, looking to make profit off upwards movement. Anyway, guys, that's about it from me today. Hope you enjoyed it. Try and do one of these again a bit sooner. Take care, be smart. Don't work too hard, work smart, and plan ahead. Enjoy. Take care. Over and out.